What's up guys, welcome back to another video of German Dream. And if you are a new visitor, please don't forget to hit that subscribe button and press this bell icon so that whenever I upload a new video and whenever we are online, you can get a notification and you can immediately watch this video on tops. So today we're gonna talk about a very important topic which is very useful for many of the students who are thinking to study abroad but are restricting themselves to study because of the financial problems, because they think that they cannot afford the fees and other stuff. So we're gonna talk about that stuff and how to get a student loan. Also we're gonna talk about the terms and conditions, the documents required, and the most important thing is getting a student loan beneficial for you, or is it beneficial to finance your studies by yourself. So we're gonna talk about that, and by that time you can follow us on Instagram, the handle is right here, and you can follow us on Facebook, the handle is right here. Don't forget to follow us there, and also don't forget to join the WhatsApp group to which the link is given in the description, because it is the most convenient and easy way for us to conversate, so that you can put your queries there and I can answer you with the solutions. Also there are many other students in that group who can solve your problems and give suggestions to you. So it's a great environment up there. Also you can drop your ideas or your questions about which I can create new videos for future uploads. So without wasting any second, let's just roll the video. So guys, the first thing which we're gonna talk about is from where we can get a student loan. And the most important thing is that there are two types of organizations that can give you a student loan or an education loan. And these organizations are either the banks or the Nbfcs. So most of you people know about the banks, what are banks, and most of you people do not know what are Nbfcs. So Nbfcs are the non-banking financial corporation. These are the corporations or organizations which lend money to the people, but these are not the banking organizations. So let's take an example like India Bulls. These are not banking organizations, these are Nbfcs, but still they lend money to people. Okay, so if you are applying for a student loan, you must make sure that there are two types of student loan which are available in the banks in Nbfcs. These are one with collateral and others which are without collateral. So if you are not comfortable with these banking terms, make sure that you are watching these videos with your elder or someone who is good with these terms, so that you can easily understand what this video is all about. So in easy definition, what if I tell you, a collateral is like a guarantee or a security. So let's take an instance. If you apply for a student loan of 30 lakh rupees, then you have to make sure that you show your security, that either you have a property or something which values the same of that student loan, so that if the bank has a security that if the person is not able to pay his loan in the repayment time, then they have a property which has the same value and they can recover their money from that piece of land or something else. Okay, so that is collateral. So if we talk about the loans with collateral and non-collateral, we're gonna discuss that which is beneficial and which is not, what are the pros and cons with both of them. So first of all, we're gonna talk about the banks or Nbfcs which provide loans with collateral. So beginning with banks with collateral is that when you go to a bank and apply for a student loan, they would ask you for a collateral and something, and you would provide the documents and other stuff. So the main benefit of applying to the collateral is that the interest rate you get on that loan amount is comparatively lower than the loans which you get on the non-collateral loans. Okay, so for an instance, if you apply for a non-collateral loan, the interest rate would vary about from 11 to 12 or might be 12.5%. So that would be the interest rate per annum on your loan amount. Okay, but instead if you go for a collateral loan, that is a secured loan, In that case you might get the student loan for 9%, 10%, or might be less than that, if that varies from banks to banks. Okay, so collateral loans are the secured loans because the bank has a security deposit from you, so that if you're not able to repay, they have something from which they can recover the amount. But with non-collateral case, it's not that. So that is why they charge you more, because you are not submitting any kind of documents or other stuff, and still they are providing a loan. That is why they apply higher interest rates as for their fees or other things. Okay, so for applying a loan, as you are a student, you do not have any income, or you do not have any business or something, the bank is not going to give you a loan directly. What you need to have is a co-applicant or a guarantor. So your co-applicant or a guarantor would be your parent or your legal guardian, or the person who is providing you the collateral. And make sure that the collateral can be provided by anyone. It is not a legit rule that the collateral provider must be your relative or something, or he or she should be your family member or something. The collateral can be provided from any person. I mean, any person can sponsor your collateral, and that person will be your co-applicant or the guarantor. Okay, in the case you are not able to repay the money, then that person's property will be acquired by the bank. Okay, so co-applicant is very must. And the documents required in the collateral case is that you need to submit your property documents if you are providing your property as a security. These documents are required because the banks or the Nbfcs which are providing you the loan, they verify the property that it is indeed owned by that person who is a co-applicant or a guarantor, and they verify other stuffs. These are some legal terms which go in the background while you are applying for a student loan. Once all these things are verified, the other important document is your verification document, that is your Aadhaar card, which is a universal document now in India, and this document verifies you as a legal citizen of India and other stuff. And the most important document which is required for getting a student loan for studying abroad is your admission documents, which includes like your admission letter which you have received from the university which you have applied, and other documents which you have received from that university where you have got the admission. Once you have all the documents, your co-applicant, your property papers, your admission papers, and you go to a bank, you can apply for a student loan in the banks or the Nbfcs for a collateral. Again I'm saying, okay, so for a collateral you get the loan, and make sure while you are getting your loan you read all the terms carefully. And now talking about the interest rates, since there are two types of interest rates, that is the simple interest and the compound interest, please make sure that the bank is providing you the simple interest rate, not the compound interest rate. Okay, so many of you might be wondering that when do we have to start repayment of that loan. Okay, so suppose you are applying for a master's study course, and your master's study course is for 2 years. Okay, so during that 2 years you do not have to repay anything. Okay, after completing your study while you are employed, you have a repayment time of 5 years or 6 years depending on your requirement, what you ask your lender. So they would ask you for the repayment time whether you want to go for 3 years or 4 years or 5 years, and according to that your interest amount of what you will be repaying to them would differ. So you can take that time period according to your suitability. So let's take an instance for 5 years, and you are applying for a 30 lakh rupees student loan, and for instance you got an interest rate for 10% per annum, which is on simple interest. Make sure you go for simple interest loan, not for a compound interest, because simple interest is much easier to repay than the compound interest. Okay, so go for a simple interest. Once you complete your studies, you are employed, you have a 5 years repayment time. During that 5 years repayment time you have to repay that money, or if you are not able to repay that money, your property would be acquired by the banks. Okay, so apart from the interest rate, there are also other charges which are included. So there would be a charge like the processing fees. So if you are going for a bank, a public sector bank, or the NBFCs which are providing a loan with a collateral, they would ask you around rupees 15,000 processing fees, which is required for all the documentation and other stuff. But if you are going for a non-collateral loan, they would ask you for 1% of the loan amount which you are applying for. Okay, so for instance, if you are applying for a 40 lakh rupees loan, then they would take 1% of that loan amount as their processing fees. So don't go for that 1%. If you're thinking that it's just 1%, it would be lower, please check the numbers, do some math and compare the amount, because you might be saving around 25,000 to 30,000 rupees if you go for a collateral loan instead of a non-collateral loan. Non-collateral loans are basically for those people who literally do not have anything as a security or as a guarantee. These people should go for a non-collateral loan. Okay, so these are the repayment, these are the processing fees and other things. And the other most important thing is that the liquidity. So once you are in the bank, you should ask your lender that how you can use this amount, that whether this amount would be directly disbursed to the university, or whether this amount would be given per semester basis or per year basis. So you should make sure that you should ask for it. But the most of the banks here in India, they disburse the money only when it is required. Okay, they do not disburse all the amount at once. So because this would cost you a lot. So for an instance, if you take a loan of rupees 30 lakh, but during your study period whole amount is not used, you are using only around 20 lakhs, okay, then you are paying for that 10 lakh rupees which has never been used. So make sure that the money is not being dispersed at once. The money should be dispersed only when it is required by the university. Okay, so like for your application in the university, you are required 20,000 rupees, then the 20,000 would be dispersed. And if while you are there, you require for some other stuff, for some other application, then the money would be dispersed from the bank when required. So this will make sure that you are not taking some extra money, and you are not paying extra for that money which has never been used by you. Okay, and make sure that you ask your lender that whether you can use this money before going to that desired country, because there might be the scene that you want to use that amount for booking your flight tickets from here and other stuff. So and you are not, and if the money is dispersed directly to the university, you might not be able to use it. So make sure that the banks are not dispersing that money directly to the university. They are gone through your account or other stuff, so that you can use that money for your need also, whether you need to apply for flight tickets or other stuff, so that you can use that money for your requirements when you need it. Otherwise, taking a student loan is useless, because you won't be because then it won't be used for other important stuff which is costlier, but it is not important in the eyes of banks. So make sure you ask these questions, and also make sure of one thing, that what are the currency exchange rates during the time when you are taking the money from the bank. Okay, so like if you are in the university in your desired country and you need some amount and you are getting that amount dispersed from the bank, since the banks are not dispersing that money in that currency which is being used in that country, they're gonna disperse that money in rupees, and that will be converted into that currency using forex currency change. So make sure that you keep an eye on the current exchange rate, so that banks are not taking benefit of that stuff and charging you extra. So you need to make sure that what are the current exchange rate and what are the other stuff, so that you are on the safer side and you're not paying extra for anything. So one thing is that, and in the end we're gonna talk about what is beneficial for you, whether to go for an NBFC or for a bank. So according to your requirement, both are okay. I mean, if you are a person who has some security or guarantee to submit, and you want to go for a lower risk loan, then you should go for a collateral loan and instead of non-collateral loan. But if you are someone who really does not have anything to put on as a security or guarantee, then you should go for a non-collateral loan. Though you would be paying a lot compared to the collateral loans, but still that is your last option, so go for that option. So I think this was it for that video, and if you want to ask anything else, if I would have missed anything, then comment it down in the comment box. I assure you I would be replying to each and every comment if I could, because most of the time people are commenting to the videos a month or 2 months later after uploading, so it becomes difficult for me to check each and every comment, but I would try my best to reply to each and every comment. So I think this was it, and I hope to see you next time on the other side of the screen.